Alright guys, we're gonna call the meeting to order. Please stand for the pledge of allegiance.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you everyone for coming. Today's date is March the 12th, 2018 at 6:30. It's a regular city council meeting. Lacey, you wanna do the roll call for me?
Councilmember Johnson.
Here.
Councilmember Hutchison is absent. Mayor Yoder.
Here.
Councilmember O'Regan.
Here.
Councilmember Carlson.
Here. Let's just do a quick test on our mics, make sure they're all working. I gotta pull mine up a little more. Steve, hello? Can you hear us, Steve? Hello?
Hello.
Check.
Bring it up, Pat. You didn't even turn yours on.
Yeah, his is
Mine's on.
Just gotta bring it up a little closer.
It's on.
You can bring it up. or
Can't
I'm
hear
gonna
me?
I'm gonna turn it on out loud.
You can't hear me? Can you hear me?
All right, we have, anybody have any deletions or additions to the agenda? And we do have one item that we're gonna put under, new business would be number 3, be special event permit application. Does anybody have anything else they wanna add? All right, and we'll move on. I'm looking approval for the consent agenda from A to F.
I will make that motion.
Okay, motion made by Carlson, looking for a second.
Second.
Second by O'Regan. Any discussion? All in favor say aye. Aye. Those opposed, same sign. Motion carries. Planning and zoning, Pat?
We don't have anything actionable coming out of the planning and zoning this month.
Okay. The new guy was present.
He was.
It was fun. I think we got quite a bit accomplished on going through.
We did, yeah, he's gonna come back the next meeting with some, after he reviews everything, his recommendations for us. So hopefully next month we'll have more to talk about.
Perfect. Anybody have anything for the building department? All right. Any old business, unfinished business somebody has that wants to talk about? All right. New business. Looks like we have our year-end of 2017 audit by Schlenner and Wenner. John, you got the floor.
Perfect. Okay, if I pull up a chair?
Yep, go ahead.
We're gonna try something new this year.
Okay.
And so rather than flipping through all these different pages and trying to follow what I'm saying, I've summarized it all for you.
Oh.
So we're gonna go through a handout instead. I'm gonna just leave one here for me.
Thank you.
Sure.
I'm gonna give you all the extras.
Do
Do you want one?
you have?
So we'll try something new.
Yeah.
If you don't like it, we'll go back to the old way. So, first of all, thanks for having me here tonight.
Yep, no problem.
We're gonna walk through kind of we'll start with how the audit went, is what we did, what we found, and then we'll go kind of over some numbers on maybe more of a high level approach, maybe a little higher level than what we've done in the past. You all let me know if you like it or not. If you don't, we'll go back to the old way. So if we want to start by talking about the audit process itself. So what we're talking about here is what we actually do for you during our audit. And the approach that we take is that we start by asking questions about what you all have going on. And that includes not just asking questions, but reading your city council minutes, reading the newspaper to see what's going on in Motley, looking at what's going on in your industry, cities as a whole, and gathering information on what do you have going on, what are you facing, and then using that information to design our audit procedures. So we start by gathering information, inquiries. From there, we do some analytical type procedures, so that's looking at your numbers compared to where we'd expect them to be. So we're talking about maybe looking at your budget to actual. We're talking about looking at your numbers compared to what you've experienced in the past. From there, we go in and we do detail testing. And detail testing is maybe what you would think of if you think about a normal audit, or what you think about when you think of a stereotypical audit. That's where we're going in, we're looking at your source documents, we're looking at invoices, bank statements, bank reconciliations. There we go, now you can hear me.
Yeah.
And we're trying to prove that what you say happened during the year actually happened. Okay? The end result of all that is we give an opinion on whether we think this big book here, the financial statements, are correct or not. Okay? So, if we want to talk about how all of that went, we're going to go a little out of order compared to what I normally talk about. It went really well. And so what we're looking at is issues with your accounting policies. Are you following the accounting principles that you're supposed to be following? We're looking at, are there alternative ways of accounting for things that you should be doing or that you can do that we'd like to see you do? We're talking about weird transactions, unusual transactions, fraudulent type transactions. No issues with any of that, so that all looked really good. We take a look at your estimates. In your financials, there are estimates, how long your assets last for, their useful lives. That's the biggest estimate you have. No concerns with that. Okay? This next page talks maybe a little bit about how it went dealing with your staff, your team. How it went dealing with Lacey and it went really well. We had a good working relationship with her. She provided us information that we asked for. She gave us everything we asked for. She answered our questions, very accommodating. So that went really well too. If this were a different slide, if it were saying that there was issues, all of a sudden there's a red flag for us. And then we start doing different types of procedures, but everything went really well there.
Good.
This isn't part of the evaluation, is it?
No, it's not. No, so if she's got an evaluation coming up, you can rip that page out if you don't want her to see it. Internal controls. I talked a little bit about how we go through the audit process, how we plan your audit, how we design our procedures. One of the things that we do is we take a look at your processes, your controls, and if we see something that could be improved on, we report on it. And you've heard this from us every year. You don't have a large accounting staff, and so because of that, you have a lack of segregation of duties in your accounting function. What that means to you is that there's always going to be risk of error, risk of fraud for the city. There's just not enough hands, not enough eyes to mitigate that. So you mitigate it the best you can. I see you've got a claims listing sitting right here that you go through, that you approve. That's one good way to mitigate it. You know, so you're doing some things to help with that. The risk is always there though.
This is a situation that's common for a city our size.
Very common, yeah. Yeah, it would be actually unusual if you didn't have this.
So is there anything else we could realistically do?
It depends on how much you want to roll up your sleeves as the city council, because that's really the only way that you have to mitigate. In reality, looking over things like this, that goes a long ways.
It'll be monthly when we get these, read them thoroughly.
Yeah, read them thoroughly. We call it professional skepticism. Yeah, that's a good question. Audit adjustments is the next page. When we go through the audit, we're looking at numbers, we're looking at source documents. If we see something that needs to be adjusted, we're gonna adjust it for you. The adjustments that we posted this year are mostly, we call them cash to accrual adjustments. What that means to you is in your enterprise funds, your water sewer funds, they have to be reported on a different basis of accounting than your governmental funds. They have to record things like capital assets, receivables, payables, long-term debt on the books itself. And so we adjust those for you every year.
Okay.
Those are the audit adjustments, that's primarily what we had. In terms of minor adjustments that we didn't post, there is one related to timing for when some disbursements were paid. They were budgeted for in 2017, they were included in 2017's books. They were put on the credit card, they weren't paid for until 2018, but they are included in 2017's report. Technically, probably should be in 2018, talking about a small dollar amount, so we're able to pass on adjusting that. Okay. Last internal control item we have, we draft your financial statements for you. It seems silly that we have to report that, but that's the world that I live in, so that's what gets reported. Other things we look at for the audit, compliance with Minnesota statutes. And so I've got it listed here, the different areas that we look at, but in reality, what we're doing here is we're looking at different areas that the state auditor wants us to check. So we're talking about things like bid law compliance. We're talking about, do you have enough collateral on your bank accounts? Are you following statutes the way you should be? That all looked really good. So that checked out good. You're gonna see later on, we do have a management letter comment or advice comment related to police forfeitures. I think you've already talked about that already, so probably don't need to go into that a whole lot more. Okay, we talk about some numbers here. This page is the general fund. The way this is laid out is if you look at the very last section of bars, that's gonna be your 2017 budget. If we go to the candy stripe columns, the candy stripe bars one over, this is how we actually ended the year. Blue is revenue, red is expenditures. And if we look at the numbers here, revenues came in at $431,000, about $50,000 higher than what you budgeted and last year also. And the reason for those increases, you collected more property taxes than you have in the past and what you planned on, and you had insurance proceeds that you collected. Those two items kind of jumped your revenues up. Looking at expenditures came in a little bit below budget, higher than last year. If we were to look at the detail here, which I know you don't have, public safety spending is up about $26,000. I'm sorry, $19,000. General government operations spending is actually decreased. So on this page, you're going to see there's a line for other sources and uses, $38,000. This is the net of your transfers coming into the general fund and transfers being made out of the general fund. And you're going to hear a recurring theme for a little bit here because you all set up a new capital reserve fund this year. And so as part of having that new capital reserve fund this year, it's skewing some of these trends that we like to lay out for you because you've got more transfers coming out of the general fund than you normally would, which means your fund balance is decreased in the general fund. And you're gonna see some fund balance trends that look a little different, and cash trends that look a little different. So fund balance in this fund, in the general fund, decreased about $40,000. That's after about $100,000 or so transferred out to the new capital reserve fund. Okay. If we look at that fund balance and look at it in terms of as a percentage of a year's expenditures, right now you're at about almost 139% of a year's expenditures. This is in your unassigned fund balance. So what you have available for day-to-day spending. You're in a good fund balance position in the general fund. I like where it's at. And you've had some nice growth over the last few years as well.
One question, Lacey's tried to, or did explain the transferring of funds
Yeah.
to me. Can you, how is this going to help us keep track of monies better where they're going? Or-
It's probably gonna make Lacey's job easier.
Okay,
And it's gonna make it more transparent probably, how much money you have set aside for this capital replacement fund, for these capital replacement dollars. Because you'll be able to look at the actual fund and see exactly what kind of dollars you have in it.
Okay.
Okay. Looking at the general fund cash balance on the next page, cash has decreased a little bit from last year. This is because you transferred dollars out to that new fund. If that weren't the case, you would actually see this line continue kind of along the same path, increasing in the general fund. But because we've pulled those dollars out, you're seeing that dip. You're gonna see on a few pages the increase in that fund, so. Okay, looking at the rest of the governmental funds, what we have here is the fire fund, street improvement fund, and then we call it non-major governmental, which is actually several funds lumped together. Okay, fire fund first had revenues of 115,000, expenditures of 102. Transfers out going to this new capital reserve fund of 113,000. Overall fund balance decreased by $101,000 because of the transfer. Ending fund balance is 217,000. Looking at street improvement, you've got $90,000 of revenues coming in. This is mostly tax dollars. You've got 113,000 of expenditures. Overall fund balance decreased by $22,000, so you spent this one down a little bit. Ending fund balance is $320,000. This non-major column, this is mostly debt service. You've got revenues of 149,000 coming in, expenditures of 214. The other sources and uses line of 264, this is actually your transfers coming into that capital project fund, or capital reserve fund. Ending combined fund balance is about 1.17 million. Okay. And on the next page, I promise this is the last time you're gonna hear me talk about the new capital fund, okay? But it is skewing the numbers on this page too. If you look at that orange line, this is your cash in these funds. That orange line jumping up, this is the dollars coming in. So this will be really useful in a couple of years now that this is set up and we get a nice trend going. But for now, you're seeing a jump and you're seeing a decrease in the other funds. Street improvement fund's actually pretty steady in terms of cash over the last 5 years, $320,000 at the end of the year. Fire fund dipped down a little bit, $217,000, because we transferred money. Okay, I promise I'm done with that now. Okay, water fund. First thing you're gonna notice when you look at this page is our net position, or you could think of it like your equity or fund balance, really jumped up a lot in 2014. That's the first thing that I noticed when I looked at this. That's because this is the year that you assess dollars for your water treatment plant project. And so because you assess those, you record them as an asset on your books, it increases your equity position. So that's what's going on there. If we were to look at the numbers for the year, operating revenues came in at 303,000, operating expenses of 319. Operating expenses are up about 75,000 from last year. Your depreciation expense is up about 75,000 from last year. And the reason for that is because you have this new water treatment plant that you finished that we capitalized at the end of last year. We're getting the first full year of depreciation now on that asset. So it's a non-cash expense, but it is increasing your operating expenses. Overall, you do have an operating loss in this fund now, like I said, because of that depreciation. After transfers and everything else is all done, net position decreased by $100,000. That's after a $72,000 transfer into the general fund. Ending net position 4.7 million. Okay, looking at the sewer fund. Sewer fund revenues came in at 326,000. Talking operating revenues here, so we're not talking about things like assessment dollars or interest or anything like that. Operating expenses of 241,000. This fund had an operating income of $84,000, which is good. That's what you want to see. Transfers, overall transfers out 107,000 to the general fund, 126,000 of total non-operating expenses and transfers. ending change in net position is about $2,000, so pretty close to break even. And this fund ends with a $3 million net position.
So we look at, I was just looking at the bottom numbers from
Yeah,
13, 14, 15, 16, I mean, they really are staying kind of the same.
very steady, yeah.
Do you want that to grow?
You
As
know,
the years go by?
you likely would, and the reason for that is because the infrastructure for these funds is hugely expensive. And so by not growing it, you're not setting yourself up for future repairs and future projects, yeah.
John, real quick, can I ask a question?
Yeah.
Does this, then that bottom line number, does that include like our sewer reserve fund? Does that roll it out?
Yeah,
That
we
rolls
wrap
all,
those all
right?
together, yeah,
Okay.
that's a good question, yeah.
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 Okay, so that does, so we are setting aside
You're
money,
setting
that's
aside
where we're
money,
set,
yeah.
but this number includes all of that.
Correct.
Okay.
Yeah, that's a good point, that we actually have several funds that we wrap together that we consider to be a sewer fund for the audit.
Okay.
Okay, solid waste, pretty small fund, we've got $50,000 of revenue coming in, 46 coming out. Overall, net position increased $5,700, and you got $14,000 of ending net position, which is pretty close to your cash balance in that fund. This fund doesn't really have any assets that it holds. In terms of cash, sewer fund is growing. And it has been steadily growing for the last few years. Water fund cash balance has decreased over the last couple of years. And solid waste is pretty minimal.
Bruce, do we know why that's decreasing, or
I assume it's because of the well and all that.
because of the expenses we're doing?
Correct, the water fund should be decreasing, we just finished the well, so money, that fund is getting wrapped in there, I believe.
Yeah, yep.
So right now, I think that's the biggest reason.
Okay.
In terms of long-term debt, you're gonna see a big spike in around 2015 or so in the business type funds. This is your water treatment plant debt. Otherwise, you're spending down your debt that you should be. If you all remember last year when I was here, we talked a little bit about the management letter and we had a couple recommendations for you. One of them was that you have a formal outstanding check policy.
Okay.
Another was that you use mileage logs on your vehicles. Those are the two recommendations we have. You took care of both of them. So that was really good to see. Actually continuing recommendations from last year, we don't have any. So you took care of everything we recommended. New one is that you look at getting a policy for your forfeited vehicles, forfeited property, which I understand you're already
Yep.
looking at that. Any questions?
No, I like this. Done like this makes it a little easier than question two.
You don't want to go back to flipping through the,
This worked just fine.
yeah.
Yeah.
You answered my questions.
I would have been surprised if you said you didn't want to go back to the old, but I've yet to hear anyone say that.
Good job.
Thank you.
Good
Yeah.
job, Lacey.
Yeah, Lacey did a great job.
Good. The only thing I have is that I looked at your bill and
Yes.
I talked to Lacey a little bit about it. She's aware I'm gonna ask you this, but, you know, it's growing
Yes.
considerably. What page is that on? 15.
Yep.
Part of it, I think, and I know we had a contract, and I don't know if we laid it out quite clearly. Cause I think last year we paid $12,005, this year we're at $12,500, and then all the extra expenses comes up to $15,000, it's almost $3,000 higher.
Yep, yep. And I probably should have explained this better up front. But basically what we were looking at, what I was looking at when I designed the contract for this year is I took a look at your last 5 years of audits. And I looked at how much time do we have in them versus how much are we billing.
Okay,
And if you look at the history for the last 5 years, we've been averaging about a 40% discount, which is pretty significant discount, to the point where we were actually losing money by doing per audit. And so what I've done is I've adjusted that to, you're getting about a 20% discount right now,
okay.
so.
When you
that's the
say
max.
discount, good question, or
Yeah.
good eyesight. When you say discount from what?
So if we look at our time that we have into your audit, if we were to bill it at 100% of what we would bill at our rates,
Okay,
it would be about 40%, would have been about 40% higher than what we were billing you. If we hit about 20%, we're at just a hair above the break-even point at our firm. Below that, we're actually losing money.
I personally am, and have been over the years, happy with you. When you say these discounts, is this true for every town, or is this just for Motley, or how are you addressing that?
Motley has a larger discount than a lot of the audits that we do. We have others that we discount as well, just because maybe the timing makes sense for it, or because we really like the city, or one reason or another. Yeah.
So if we bring sloppy joes and chips in every day, when you come, you'll be getting.
Then you get a bigger discount. I'm gonna hold you to that next year. Yeah, but that's the story, and I really should have communicated that better. I really apologize for that. That's the backstory.
So we're at 20% now, is that where we can expect to stay?
That's where you can expect to stay.
Okay.
Yep, because we've tipped over the point where we're starting, we make a little bit of money, but we're not like rolling around in cash or anything, but enough that we can sustain it.
Okay.
I think we have a 3-year contract too,
Yep.
so I have two more years after this. All right, well, thank you.
Okay,
Yes,
thank you
thank you.
very much.
Yeah. All right, let me see where we're at here. So the other handout is our state financial statement. Okay, thank you.
Thanks again, appreciate it.
Which I think he covered, right? Yeah.
Yep, that was the new summary he gave you, so.
Yeah. All right, the special event permit application, which was handed in late here, but need a motion to approve the special permit application.
I do have one thing quick.
Okay, okay.
On this application, this was a draft application. It indicates there's a $25 permit fee. A fee has never been set by resolution by the council, so at this point, there would be no fee. So I wanna make that clear upfront.
Do we need to make a resolution, or are you gonna do like a resolution at the meeting for this then, or what? For the $25?
That is up to you guys, or we can change the application fee. We can have it included on the 2019 fee schedule.
Oh, I see.
So it's up to you whether you wanna have a separate one just for this or not.
How do you guys feel? Because we can always waive it, but we should have some fee on there.
I think we should put the $25 on there, it's not that much. Pay for a little bit there, or apply it to whatever.
I would agree with that as well.
And so,
Okay, we're gonna wanna leave it on there, Lacy, so we need a motion to approve the, $25 permit fee on our special event application and also approve the special event application. Is this, do we need to approve this specifically for, Music Fest?
No, this is just,
Our ordinance says that there has to be a form prescribed by the city council to have a permit for special events. There wasn't one in the past that I could
So this
find.
is the one that we're thinking of.
So this is the permit
Okay.
that you guys would approve, that people would have to turn in, and then you guys would actually approve the event.
Okay.
I will make that motion.
Motion made by Johnson, looking for a second.
I'll second it.
Seconded by O'Regan. Any discussion? All in favor say aye.
I
Those opposed, same sign. Motion carries. B, the township contracts were up and it was, we had a good turnout, a lot of them showed up. Looks like, the ones that need to be signed, or, yes, it was no changes. Ones, we got Becker, Bryan, Fawn Lake, Mabe, Meadowbrook, Motley, and Villard. Those are on page 19 and 19 through, or 16 through 19. There's really no changes, they just need to be, the contract was due, so they renewed them. Need a motion to approve those contracts.
So moved.
Motion made by O'Regan, looking for a second.
I'll second it.
Seconded by Carlson. Any discussion? All in favor say aye.
Aye.
Those opposed, same sign. Motion carries. Resolution 1805, or 2018-05 for support for the Minnesota DOT District 3. Basically, they're looking at, there's a couple options on there, but it's gonna be on page 20 to 23. Sounds like they wanna do just want the city's support on if they can do a 4-lane from 210 to Pillager and maybe from 10 here, Motley, to all the way to Brainerd.
They're just asking us to approve the concept of doing it. They're not
we-
asking for any approval of any
Right.
specific, anything specific as far as where it's gonna be or anything.
correct.
They just want our support, I think, so that they can